Hi, welcome to the Market Alert for Monday, the 8th of June 2020. Well, what can I say about Friday? The non-farm payroll figures came out, and as it says here, the job report was a shock. Payrolls rose by 2.5 million. I mean, this is just, well, there are no words. I mean, it's just incredible. We've been in lockdown from all the way through April and part of May, and yet the 7.5 million job losses that were forecast vanished into thin air, and we managed to find 2.5 million jobs. And it gets better. You can't make this stuff up. If we have a look here, you will see this makes no sense. In a month when the US was shut down, the Bureau for Labour Statistics estimated that 345,000 new businesses were formed. I mean, that is miraculous and a sheer stroke of genius. You really cannot make this sleight of hand stuff up. You really can't. Yeah, I mean, the fudging is on a different level altogether now. I've never seen anything like it in nearly 30 years of watching the markets, looking at the data, and it's not just me as well. Just do a search through the Money GPS, Greg Hunter's interview with John Williams. Everybody is just rendered speechless over this. It is an absolute joke is what it is. There's no other way to describe it. So the figures were fudged, as you can see here. They were forecast at 7.5 million minus 7.5 million, and ended up with 2.5 million on the upside there, which we all know, if you've got half a brain cell, that this was a complete manipulation of the data. And of course, Trump's having raptures about it, I'll be polite. Incredible. It really is incredible. Yeah, so that was the one that we just looked at. But yeah, so let's have a look at the market's reaction, shall we? We'll start off with let's start off with the Dow Daily, because we ploughed straight through the 78% retracement, closing just above this on Friday. I'm recording this on Sunday, so that's why you're not seeing anything for Mondays, but I imagine there'll be a bit of follow through on this. I just wanted to get this out because I'm incredulous to what's gone on with this. Never seen anything like it in my life. So 89 is the next upside target. We're through the 200 MA as well. So it's plain sailing back to the all-time highs. If they can manipulate to this extent, then there's no reason why we can't go back to the all-time highs. And here you can see the news when it broke. And immediately prices move up 100, 200, 300, 400, 450 points before we got into the main part of the session. 450 point rise on this BS. It's just incredible. Absolutely incredible how this one was pulled off. And if all these years I've come under fire saying that the markets are manipulated, well, there you go. If you want proof, you've got it now. I mean, it may be a case that they've just added back the people that were furloughed into the jobless numbers to fiddle them that way. I mean, again, a sleight of hand, because they were already out of job and the employers were paying them to stay at home. But I wouldn't put anything past the powers that be at the moment with regards to all of this, to keep the illusion alive that everything is fine. I mean, let's just jump back to the daily chart, because you look at this and you can see the drop in March, and then we get a bit of a bounce, and then we see the market now heading towards 90% recovery of the move to the downside. And the best analogy that I can come up with here is that you can look at somebody and think they're in really good physical condition, but not realizing underneath that their kidneys are starting to fail, their liver's starting to fail, they've got a heart condition, their cholesterol's high, their blood pressure's high, and the patient's dying, but on the face of it everything looks fine. And this is exactly what we've got here. We've got the patient here is incredibly sick. The economy's gone to wreck and ruin, and yet we can manage to pull 2.5 million jobs out of the bag. And I've just been watching a video. I'm digressing slightly here, but you can obviously tell how irritated I am by this, because I mean, there's one thing in actually stretching it, but by God, they've stretched this one round the globe. Incredible. But yeah, I was just watching this video about UK house prices, and the Office for Lying Statistics are not going to publish any data on house prices now until we get through the furlough period. I mean, you can't make this stuff up. I mean, the house prices wouldn't really have been too affected, surely, in the first month of the lockdown. Same thing. Wow. So if they don't publish the figures, again, this psychological thing that everything's fine. We're all going to die of the coronavirus, but the economy is going to make a V-shaped recovery, and they both are completely the opposite to each other. But hey-ho. Anyway, let's get back to this. So, yeah, you can see that the market opened and traded sideways, and eventually we had the last move to the upside. So 890 points, or near on 1,000 points for Friday, and then the market saw some selling coming into the market, pulled back, went back, did its usual retracement stuff, and then sold off some of the move. Again, coming back to more or less where it had the last leg to the upside, managing just to hold on to that initial spike there that we saw. And it was the same for the German DAX, this going through the 78% retracement there. Let me just narrow this up a bit and do this. And there you can see also heading towards 89%, already through the 200 MA. So again, heading back to the all-time high. None of it makes any sense, as I've already said. But it is what it is, and this is where the money is finding its way. That was printed, the money that the huge amounts that's been printed is finding its way back into the markets. So in the first part of Friday's session, in the 2-minute chart of the DAX, you can see here that prices. This is at 7 a.m. The DAX opened around here 8 a.m. So you can see from this low to this high in the sort of pre-market part, the first hour, when the futures go live, you can see their prices coming back 89%, and there you've got all of the buying there as well, all the green. And the market moved higher. This is even before we had the job numbers. Prices then moved sideways to lower, which we can see here as we headed into lunchtime, and then pull back a significant amount. What I mean by significant is from this low to the high. I think that's about the high. We'll go with here. And I'll just drag this across, and you'll see prices retracing 78% there. Just move the chart over for you. And again, you'll see them picking up the buying there at this level as prices move back to the upside here from this high to this low to 62.78 as well. I've just deleted the 62, but the 62 around this area here. And again, you can see some selling coming into the market. Prices then double bottoming just a bit lower. And then again, retest here. And here we have the spike. As soon as you get the news, the DAX moving high, just over 100 points, nothing like the Dow. And then moving to the upside with the Dow. But then falling foul of some selling coming into the market. You can see 78% retracement there. Moving back to 78% of this low, and then again inside of here to here 78, and then moving to the upside. But again, before the close of the DAX, prices moving back to the downside there. Implied volatility is moving to the lows, 22.01. Actually, I think it's a bit lower than that. That may be on the wrong bar. I think it was 21 something. We'll go with 22, but I think that might be wrong. However, you can see that it's back to this level now. And I'll just remove this. I've actually put in a light grey line there to show you that 21 happened as we started to sell off. And we're now back to this sort of level here as well. But I would still expect the market to move back to the all-time highs at this time, given the amount of sleight of hand that's going on at the moment, and chicanery by the powers that be. News this week. Well, the criminal's out on Monday. She's speaking. And then nothing on Tuesday. Wednesday, we've got the FOMC. They're not going to do anything on rates. They will be negative by the end of the year, if you want a prediction. We've got economic projections, FOMC statement, Fed's fund rate, and the conference there, which of course is the press conference, the live one. So it'll be interesting to see what Powell has got to say. And then Friday is the last high impact news item. So not a lot really to worry the markets this week for the time being. I mean, the CPI is even classed as 0, which you'd expect, I suppose, given that we were in the lockup at the time. Right, that will do it for this one. Like I say, it's a Sunday afternoon, but I would expect the market to open and bounce a bit and then see a bit of profit taking. But no, nothing to worry the markets this week, as you can see here. Okay, that will do it for this one. As ever, thanks for watching. See you in the next.